Hi, this is Tom Nunemaker with Capital Discussions. This is my daily trade review for July 31st, 2014. So we had a really big drop in the markets today, and if we pull up a report from MarketWatch, let's see, here we are. Okay, so they were saying this is the biggest one-day drop in 6 months. Investors weigh the implications of robust economic growth and signs of rising wage inflation on Federal Reserve policy ahead of key monthly jobs report, which is tomorrow. What else did they say? Kim Forrest said there was no single reason that should warrant such a sell-off, making the drop more difficult to explain. Now, I did read that there were some problems with Argentina and Portugal banks defaulting or potentially defaulting, so that I'm sure had some effect on what was going on. The markets were being sold off heavily overseas before the U.S. markets open. And in fact, about 4 hours, 4.5 hours, no wait, 3.5 hours before the markets open in the U.S., I saw the ES futures were down 13. So I actually bought some 2 put debit spreads on my ES futures options contract, and then as the market kept melting down further, it kept adding to it. So let's take a look at some of the charts. Here's our 2-day VIX and VIX futures and the ES futures options. So ES futures options opened here around 1951, currently trading around 1930. So actually they closed up here the day before, like 1965. So yeah, they're down 35, and they've recovered 5.25 points from the close, but they're still down. And actually here's the numbers. So SPX was 1930.94, down 39.13, down almost 2%. Russell down 2.28%, and DX down 2.09%. So pretty good sell-off today. If we look at the daily chart, here's SPX. This is a 5-year chart. We've had a few big moves down, like we could have something like this, which would be pretty significant. If we just look at the last 6 months, here's the drop in April, and these bars are pretty big. I think that's the bar they're talking about. That's the biggest drop, but you can see we gapped down from the close here, but we've been making lower highs and lower lows except for this bar. So the market's been kind of wanting to sell off. It definitely broke out of its consolidation range, as you can see. So let's take a look at option view. So here's the SPX trade. It's actually down about $1,300, which isn't too bad on a $36,000 trade, or margin trade, just a couple percent. Now I did add to this trade today. If I look at the T log, I have to bring that back. That's the G. So what did I do today? I bought one 1920 put. No, I sold the 1920, bought the 1945, and I also just bought a 1945 put. So I did that about an hour and 15 minutes after the market opened. I just bought a long put. So right now I am at, let me hide that toolbar. I'm at plus 12, minus 21, plus 10. So I'm actually net long one put, which is good for the position. My delta is very flat, gamma is really low, so that tells me the line is pretty flat over the near term region. I still have some positive theta. I did cut my Vega down by buying that net long put. So here's what the position looks like right now. Now if I can zoom in, you see it does tend to go up because I'm net long a put. So that's, I guess, kind of flash crash insurance, but you can see how flat this position is. So I added another debit spread here, and I bought another one of these puts. So I just flat out bought a put. I know my expiration loss is 2,000 here, but if the market does rally, then I'll sell that put back and I'll sell the extra put debit spread back for small losses and raise this part of the chart up. But my goal right now is to keep this ultra flat. Let me get the Greeks calculator out and let's take a look at that real quick. Okay, so I've loaded up the position for the SPX in the calculator, and you can see our theta to delta ratios are pretty good. Our vega to theta is a little high, and that's a little bit to be expected because we cut our theta quite a bit by buying that long extra put. But we needed that to flatten out our T+0. So really, the volatility spiked up a couple of points, probably 3 points. We're down $1,100 here, and negative 300 vega. So we were minus 400 vega before I bought the long put. So if you go 2 times 300 plus a 400, that's 6,000. That's about $1,000 loss. So that explains most of the loss, just pure volatility. So if you look at the chart and take 3 points of vol out, see it puts that line right back up here. So if the market stabilizes here and the vols start coming out, these lines are going to start going back up in a hurry. So the the theta right now 84.9. Let me see. We do this. Yeah, so the theta is 51 right now, but if the vol's coming up, that'll increase the theta. So that's kind of good. It'll get our lines going up where we want them to be. So, like I said, if the market can slow down a little bit on its descent and the vols come out, we're still looking, even at T+20, 72, 75% chance that the market's going to be in our profit zone. And if we extend that even more, let's just add another line to this. That's T+23, so in 3 weeks and 2 days, that's 69% chance. But if we hit the sweet spot, we could actually make some pretty nice money. So the key in this whole thing is don't get down a lot of money. Keep your T+0 line flat, and do what you need to do. Today I was buying put debit spreads and just long puts, and just to keep the delta and this flat line where I wanted it to be. So right now, actually, let me go back to that chart. If we go, let me take out some of these lines, and I just go T1, which is tomorrow. This is our let me zoom in and take that extra vol, and maybe I can do this. Can I move it up? No, it's going the other way. Okay, so if we look at a 1 day, 1 and 2 standard deviations, we're actually about the same position where we are now. So we basically have no price risk over a pretty large range, and we can see that from this Greeks calculator. So basically the plan is just wait and see if the market does make another big move down, which I expect it to make a continuation move, maybe another 20 points, which would put it down around maybe 1910. If it does keep moving, I'll just keep adding more debit spreads. And then, if it gets too far, if it gets out to like here and I keep flattening it, and it gets out here and I'm flat and I'm still about the same loss, what I'll probably do is just take the whole thing off and reposition it. And you can do that if the losses aren't too big. If I hadn't done anything and we had a loss down here of say 4,000 or 5,000, that's a little bit different story than we're down, $1,000 on a $33,000 trade. So let's take a look at the ES trade and see what that looks like. Okay, so I've got the ES futures options trade open. Now remember, we have kind of two parts to this. The first part is that debit spread that's really a credit spread. It looks like this, and you can see we've moved well into our profit area for that. So we have some good positive theta of, not a lot, $3.92 a day, but we are adding a little bit of negative delta, so negative 7.5 delta, and you know, there's still another $250 of profit to make if it stays below 1945. The other part is the broken wing butterfly, which is down $822, which looks like this right now. Let me zoom in, add a few more lines. And this is t plus 0, so let me make this one t plus 1. That's tomorrow. So here's our 1 and 2 standard deviation moves for tomorrow. And let's just make sure the volatility matches the at the money. So 14.7. And we'll take a look at that. So this is 1 day, 1 standard deviation of movement, and 2 standard deviations of movement. But again, you can see that the line is very flat. So what did I do today? I did, where are we? 31st. So I got up about 3.5 hours before the market opened and saw that we were down 13, and I bought two. I bought two 1950 puts and sold two 1915 puts. So 35 points wide, and those are these two. So I did this initially, and then as the market sold off, I did another one of those. I wanted to keep the same strikes so it'd be easier to keep them under control, so I wouldn't have like thousands of strikes here. So after I bought those 3 put debit spreads, I was now at plus 14, minus 19, minus 3, plus 8. So if you add those up, that's plus 8 plus 14 is plus 22, and I'm short 22. So I'm not long any extra puts. I am long this put debit spread, so that should help. And the put debit spread is up $274. This trade's down. Hang on a second, let me update the prices. Okay, so I just updated the prices. Now this thing is still trading, so I keep updating them because this is real time. It's let's see, 4, 5, 6 hours after the U.S. market's closed, but the futures options trade on during the night. So that's where we are at the moment. Now let me load this up in the Greeks calculator. Okay, so we see our Greeks calculations are all looking pretty good. This tells me we're all in the green, so if I look at the chart, I'm going to see a flat line, which I do. So that was my objective, is to keep this flat line. Now one thing I do have, let me see if I can bring this in. I have some good till cancel stop limit orders on the Globex for some of these spreads. So if I bought a spread or sold a spread and got a credit, I'll typically take about 75% of that price, set that as my stop limit price or my stop price, and then take one tick above or below that, depends if I'm buying or selling, to make sure I get filled. And that'll make sure that if the market gets to my stop price, it'll try and close that spread without taking too big of a loss. So for example, if this spread was sold for, well, let's just look. Yes, right here. So this was $10.50. So I paid $10.50 for that spread. So 1050 times 0.75. So about $7.85 to 90 cents is where my stop limit price would be. And then I would try and sell that one tick, which on the ES futures is 25 cents. So for instance, maybe I'd say round it up to say $8 for my stop price and $7.75 for my stop limit price. So I'm giving up an extra 25 cents when I try and sell it back, that to try and make sure I get filled. So then if it starts rallying on me, then this spread's going to get less and less expensive, and at some point that's going to fill. If it keeps going down and stays down here, the spread's just going to get more expensive, and I'm never going to get filled. So that's only going to really trigger as we if the prices go against the spread and the spread price decreases. So that's kind of your insurance that, you know, if the market whipsaws on you it tries to control how much you're losing on that trade. So right now, I think we're in pretty good shape. I'm keeping up with the market, even considering how big of a drop we've had. I was talking to Tony Sizemore, and he and I both think that there's a good chance it might have a little continuation tomorrow. So I would look for this to close somewhere in the, 19, at least 1910 area, maybe 1900, something like that. So if that indeed is where it goes, that was ES or SPX? That's SPX. So if I look at ES, that's a spread. That's the wrong chart. Let's try. All right, here's ES. Okay, so it's already bounced a little bit, but it could easily go down, 1900, something like that. So if that happens, 1900, we're still in pretty good shape. Even 1890, we're not too bad. But if it starts selling off more, I'm going to just buy more put debit spreads, or maybe a long put, or even sell a futures contract. Now, because I can sell a futures contract, I wrote an article about this, but essentially rotates the risk chart at the current spot price. So if I do this, watch what happens to my delta. Now I instantly get minus 100 deltas, and it shifts the whole chart. So if I superimpose it and take the extra lines out, you can see that this purple is the one without the short futures contract. The blue one is with the short futures contract. So if it keeps moving down, it's maybe not a bad idea to go short one futures contract and just rotate this whole thing. Now right now we're rallying a little bit, so I'm going to hold off on doing that, but that's one of my defensive strategies in this trade to get short deltas quickly, is just sell a futures contract. And you can do that, almost 24 hours a day. So that's my trade update for the 31st of July. Quite a big day. Hope you survived and didn't lose too much. Maybe even made some money if you were in the right kind of directional trade. But we'll keep you updated tomorrow. Thanks. Bye.